Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Been quite a day. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile. It's also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you'll be seeing here today. This stream is about building the business of trading, is about trying to separate fantasy of what we might imagine it to be from what it might be. And I say what it might be because everybody's mileage may vary. Everyone's truth is different, but there are certain things that seem to be consistent over the years. One of those is that the market is random in the sense of any individual participant or news event that might come in and change what's perceived to be the valuation of the market, which changes pricing. And these, of course, can be dramatic. And no matter what your plan is or what your, quote, trade is or process, we all take losses, and that's part of the business. But the business model that I've found, and I think many other traders will agree with this, is that this being a statistical business, not a predictive business, and that the gaming business or casinos, if you will, have taken this model and have been very successful with it. So if we use a model of edge or expectation or probability versus a predictive model, if we focus on the potential for a certain condition or setup or structured trade that has an edge and participate only when those edges show up, assuming you've done the work, vetted the trade, and then developed the discipline to actually do the trade, which is another issue that can be managed, and that's part of what Trader Lab is about. If you do the work and manage those elements, and it's not easy, a business like this is not an easy business. And it's because it's very counterintuitive and it pushes against our primal wiring, which is to avoid risk. And if you think about it, the survival of the species is predicated on how well we've done avoiding risk. You know, whether it's a saber-toothed tiger or stepping in front of a bus, you know, it's a good plan not to do that. Well, in the trading business, we are actually stepping in front of the bus intentionally, but we're pushing against this wiring, which will speak in our head. I call it hide. You know, it's kind of like, don't do that. I'm not sure. Oh, I don't want to take a loss. Gee, I took a loss last time. If the casinos operated that way, they wouldn't be in business. Yet we have a constant noise in our heads that interrupts our intentionality. Many of us, or I would say almost all of us, have said, next time I'm not going to do that, or I'm not going to make that error, or I'm not going to bail out, I'm not going to move my stop, yet we still do it. That is the psychological impediment. And I believe if you come to Trader Lab, almost everyone who does the work, and it is work, can learn how to trade. Now, being able to trade is a whole different element. And I invite you to visit the Trader Lab. There is no cost for this. And like everything, your mileage may vary. There is no secret sauce. There is no holy grail. I mean, if there was, I'm sure we would have heard about it. And if we think it's just indicators and time frames, I'm going to suggest that might not be what this business is all about. Great when you get a toolbox and it has 150 indicators in it, maybe you'll find the right one. In the meantime, you might be wasting a lot of time and resources if that process is not working for you. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. I'm just sorry, guys. I'm seeing there's a note here. There's no audio in Discord. Is that correct? 1 second, guys. I'm going to try to check out what's going on here in Discord. Let's see if there is a connection situation. Sorry about that. Give me a second. I'm not going to spend much time, and if I can't get it going, no, it should be. Let's see. One. It's working. So I don't know. It's working on my end, guys. So. Check. Can you guys hear me now in Discord? All right, how we doing now, guys? Are we back? Okay, sorry about that, everybody. I think that's what we call a glitch. All right, let's get right into it. Here's yesterday's high. Oh, it's my NQ. Fine. NQ is throwing me an error here. I don't know why. So this is yesterday's retail price. This was the highest volume in the RTH yesterday. This is the overnight volume point of control. Overnight volume point of control is the highest retail price in the ETH. So thinking of this as a shopper, if this was the fair price yesterday and we open above it, which is here, then the possibility exists to check yesterday's high, the overnight mid, and the overnight volume point of control. So these are targets. I think, see if there's something else up here. So that's targets on the long side. Then on the short side, hold on a second here. I'm not going to give you statistics because of the delay. Sorry about that. We have ETH high and ETH low as possible targets. Let's see what else we got going on here. Yesterday's low and value area low. These are all possibilities. So, and we're opening in something called balance. If we come over here to the left, this is the ETH volume volume profile. And what it's showing us is the market's basically rotational. So what that tells us is if this is the retail price and we open a little bit below it, then the possibility is to come back here and check it. So that's the first thing. And if we come through here, to come back up to the other side. So that's the first possibility. The next possibility is if the market is long, and the market is long in the ETH, and the market's, of course, long from yesterday, and we have a little thing I always say at the beginning of the stream, market goes up to go down, and the market goes down to go up. Well, if the market goes up, then maybe to go down. But the thing about today is, do we go up first and then go down today? Or did we already get that done in the ETH and yesterday, and now we go down to go up? I know. But this is the question. It's not, the answer's not here. The answer's in your trade plan. And then as soon as you have a structured trade that is in alignment with what you perceive to be the developing structure, that's when you interact. And when you interact like everybody else, when we take a trade, either it's going to be successful or we're going to take a stop. It's no different than the casinos in the sense they deal a hand, and if the gamblers get paid, gambler walks out with the cash, it's overhead and cost of production. So in many ways, what we have to do is see it the same way. It's business, it's overhead. So that's why statistically, even though the outcome of any individual trade or interaction, or in the casinos, any hand is random because the cards are random coming out of the deck, the gamblers play the cards randomly. And for us, other participant behavior is random also. So we're in a similar environment. So we really need to adjust not so much our emotional state, but our responses. Because emotionally, we're going to be disappointed, angry, and everything else because it's all triggered. We don't have choices over how we feel. We do have choices over how we respond. And we have to train ourselves to filter out reactive behavior, not emotional awareness, but reactive behavior. So let's look at this. RTH open. And this is the fair price. So for me, my first trade, I was looking for longs. Just telling you, I came in going, well, if we open lower and I'm above this, then the possibility is to check one of these. That's always fun. Which one, right? So I was looking for this because this is the most recent auction. I'm giving you the rationale behind it. So I thought, well, we already know this might be too low. The overnight low is here. Let's come back and check this because this is retail in the most recent auction. That's the rationale. So let's go into it. So here's what happens. Market opens. This is the developing volume point of control. I see my sellers here. Now I'm looking for this. Okay. Well, what do I see? I see my sellers. Now I'm going, oh, great. So this is my target down here because it can either test this or test this. So right here, I see my sellers, and right here, I already have a target over here. So I'm going, well, I can't sell it. Wonderful. So I didn't get a short. Would have liked the short, but I didn't get it because I would have had to take it up here because of the range. Just want you to know. So for me, I didn't have a short, and I was getting prepared to take a short on a retracement because going down. But what else do I know? This was the retail price in yesterday's RTH. So it's a target. So where am I going to sell to go for this target? Well, I either have to rotate up and go for this, or if this becomes too low, I'm going to be looking to get long to come back there. So that's my trades coming in before the door opens to do business. So let's watch. Target. I had no short, and there is that part of me going, you shoulda. Now I'm thinking I call it Jekyll and Hyde. You guys have Hyde? That's the voice in your head. It says, oh, you shoulda. No, it's always great in hindsight. Or why didn't you get out here? You had all of this and then boom. You know what I'm talking about? That's a psychological impediment to this business. Because nobody's clairvoyant. Nobody knows what's going to happen. And we all get run over. We all take stops. It's part of the overhead, and it's part of being here for the next trade. Not being right, and it's not about being right. That was it. It's like the casinos. If that was it, they wouldn't play the losing hands if they could tell. Here's our target. Now, I have structured trades in TraderLab. What were they? Long up to the target above, or short down to the target below. And I did not get it. Now, other traders in TraderLab did get it, because they post. And I post, of course, in TraderLab. But right here, micro high volume structure, right here. Let's look at the order flow right over here. Now, order flow for me has to be in alignment with the profile. I call it the chassis. And because everything I do, at least, is built on the distribution of volume, which really tells us what the participants think of a price. Now, let's do a little labeling up here. I call this a variable high volume node. It's that yellow line. Think of it like if you're in the store. It's very simple, really. And trading doesn't have to be complicated. I think we make it more complicated than it already is. What's complicated about trading is uncertainty and randomness. I think that's pretty complicated for a human being to navigate complete uncertainty at all times. We don't work well with uncertainty. Is there a saber-toothed tiger behind the tree? I don't know. Well, let's not go over there. Whereas in this business, we gotta go and look behind the tree. So right here, order flow. So what do I see? Sellers. What do I see here? Sellers. Where's my buyers? Sellers. Where's my buyers? Now, when I say buyers, I'm saying is where's the volume? Here I see buy delta. You haven't seen much of this coming down, have you? Last buyers we had were up here and they got absorbed. Who knew? Now, buyer, where's our movement up? If you see the delta, which is buy stops and buy yours, and we don't make forward progress, that is suggesting maybe that there's a passive seller there. Now let's look what happens here. My sellers were here. My buyers are here. This is a little consolidation, by the way. Why is this not going up over here? Because there's a passive seller here, and we can't see them. They're in the limit order book. But here I see the buyer, and I'm thinking, okay, going to go up. What happens? We break down. What does that tell me? Let's look at the language of the market. Too high. Sellers take over. We come back. Now, we know there's passive sellers here, and we know the buyers were here. The volume was here. What do? We come back. What happens? Selling icebergs, they are absorbed. So look at this. We didn't get above this. What this suggests now is this is resistance. Sellers below. Volume here. I get a buyer here. Now remember where resistance is. It's here. Why? Sellers are there. I get my buyer here. Iceberg. This is too high. Down. Now, sellers here. Going to zero, right? However, what is this? That's my target. Auction-based volume profile. Now you get an idea why I use this process, because it's not based on indicators. I don't use indicators. What would I do with an indicator when right here I already know that it's an important level? And there's no precision in anything, because if there's sell stops here, there can be momentum, and I can go under this, then come back above it. It's the same for me. So when I come to the location, I'm looking at it, going right here. But my plan says if this is too low, I can come all the way back across and try to check what was too high, overnight volume point of control. That's my trade. So for me, this is my first long. And it doesn't happen here. It happens when these sellers get overtaken by the buyers, which is here. I'm going into detail just to show you guys how you read order flow and you put it on top of a chassis. This is what this is all about. So this is the sellers and, going wherever. Now, this is the stop and iceberg detector. So what I'm seeing over here is just the fact there's a buying ice doesn't mean anything here. They're in a different business than us. But what I'm watching is the volume and the delta, because that tells me what's going on here. Where's my buyers over here? Well, these guys are under the bus. When we break low, sellers are still in control. Sellers are in control. Right here, there's buyers down here, but we don't know who's going to win. And the sellers are up here, right in this micro. You can put a little box around this if you want. It's a consolidation. Now, right here, nothing. This could just give me a little this and keep going. Let's look at the change, though. The buyers, notice where we are. We're above the sellers. We're above these sellers. The buyers come in here. So right here, it's changing. Right here. So I'm going to put a little line in there for us, because right here is where the buyers got above these sellers. You see the change right here. So this is micro high volume. This is high volume. I can use this volume. So let's look. Pull back. This is my entry. My stop is under here. Now the goal is to come back here and then overnight volume point of control. This is my scale right there. Why would I scale there? Does anybody know the answer to that? This is a question for this astute group of traders. Why? Right. Previous retail. Precious retail also, Moonwalker. I agree. They're very precious. So guys, this is the auction. Let's simplify trading as much as we can and accept it's random. This is a shopping experience. The auction, what is the auction? Let's make it simple because it doesn't need to be complicated. Let's simplify trading as much as we can because it's tough enough no matter what you do with it because of its randomness. So if you understand how the market works, which is what this stream is about, you can't predict it, but we can understand it. This was the retail price. In other words, the highest volume was here and the market ran away from it. We pause here and now this is the new retail price. Okay, this was too high. If I find an outside edge, and by the way, you see this here? What is that? Do you know that that is the same as this and the same as this? Here's the difference. This was where this yellow line finished at the close of yesterday's RTH. So that's the highest volume from the full RTH yesterday. This is the highest volume at the time in the developing RTH. So this was too expensive. This is the new price. This is yesterday's price. If this is too low, then we can come back and if we cross over this and check this. Is this still too high? Because it was too high. We left it. I'm not paying that. Think of it like shopping. You go to store. Get out of here. I like it better down here. Yeah, but let's go back and check. So if we find a buyer against here, then our target is this. Is that logical? Trying to make some logic here. Because if we understand how the market works, does that give us an advantage over other traders who are just following indicators and are just trying to let the indicator tell them what to do, as opposed to understanding what the market is saying? It speaks a foreign language, if you will. So I consider myself a market linguist or interpreter. I speak the language of the market. You can learn to speak the language of the market. The thing about it is, it's a foreign language. So you can either use indicators, which is Google Translate, and that's fine, except they're lagging, conflicting, and backwards looking, or you can integrate an understanding of market mechanics, how it works. Then you can always deploy an indicator. I would suggest for traders that they understand how the market works in order to use an indicator versus using an indicator and never understanding how the market works. So let's look at this. So this is long. This is the scale. This is a pullback here. So far, so good. It needs to clear this, and I am going for wherever it went, overnight volume point of control, somewhere up here. I think it's here. Somewhere. Where is it? Oh, up here. So no, yesterday's high, overnight mid, and then overnight VPOC. Sorry, I didn't see this. So these are our targets coming up. So if this is too low, then this is the target, and then going here, theoretically speaking. Let's watch. Where did we come back? Do you see this? Do you see this? This is all Trader Lab. Let's talk about the rationale. Let's come back. Do you want me to go into detail about this so you understand this right here, why this is along, or do you guys already get it? Okay, for a lot. How about you guys in YouTube? Should I go into this for you? Here's the deal. Your sellers were absorbed here. There's your icebergs. They are buyers. Now, doesn't mean we won't go to zero, right? Or even here, because this is a viable target statistically. But for me, this is much more important. Now, if we broke under here and tested this, this would be the next target, just telling you. But let's look. What happened? Remember the long? Wasn't it there? This one that went to here for a scale, right? Well, if I put this trade on, I have choices. Well, first of all, I have a lot of choices, but this is the scale. So I've got from here to here, and I always go a couple ticks in front and a couple ticks ahead. Stop here, scale right ahead of this. And then it's pull back and going north, right? Your stop can stay here and you just put your helmet on, or you're managing the trade with a trailing process. Up to you. Once you get below this, this trade would be over, or your stop's there. This is support. When I pull back here, I have choices. I can, I got to follow my plan. Let me just tell you, that's the only choice you have. And if you don't have a plan, you're a gambler, because now you're being guided by your emotions, your fear. What should I do? Oh, I better bail out. And when do you get out? You get out over here. Well, maybe if you want to manage a trade, you would get out here after you scaled, or you'd have your stop under here, and then you're going to the moon. How do you know? You don't know. You break down here, you buy it again, you scale here, or you scale back here, you buy it again. Where do you scale? Back here. Same. This is the same trade. You notice the same trade. Now watch, where do we go? We come up here. Your scale is still here. So it's long to there, long to there. You see it? Then you get this. Now right here, and this was rather perplexing, I'll tell you, because I've started to get a bit, I think the term I want to use is frustrated. That's emotions. Now, because I can't, when this happens, I cannot respond to this. There's no way. So let's look at this. Now, we're saying this is the retail price, right? And we know this up here was too high. We keep rejecting this. Come up, hit the stops, reverse, come back to the support. Come up, hit the support. Come back to the resistance. It's like ping pong, except you're using one of those hard handballs versus the ping pong ball. You guys ever play handball with those black, hard balls? We used to play that in Brooklyn, where I grew up, and you had to wear a little leather glove, otherwise you'd put a hole in your hand. Too high. Now, right here, this is VPOC migration. This suggests that this price is now the fair price, and this is too low. So let's look. What do? We're right back here, which was resistance. In order to go higher, we needed to do this. It does this. And that's like, what is going on? That's where my brain, started chattering a bit. Because it's not, in other words, I'm trying to follow this. And so far, it's doing okay. But this, out of left field, it's like, what? So, and this is 5 minutes in. I feel like I'm at the rodeo. So we come back out, we pick the stops right under here. Let's look at it. And what does it set up? I see this. Where am I? I'm back at my location. I'm telling you, I'm starting to lose it now because of this. And so this one, right here, you can see the micro high volume. Now, you have to be anticipating this. And if it gets away from you, you have to just let it go. I don't get all this one here. I was already dealing with this, thinking what's going on right here. As soon as this crosses over this trade has a problem. But it could also hold here and then come back there. So I was in the state of what's up? Confusion. And I don't mind telling you that because I have a trade plan, and if things are just rocking in a weird way for me, I have to step back from it because I'm thinking, because I don't want to overtrade. And if I start having conflict, I have something in my trade plan that says if you're flipping like a flounder on the dock mentally, like, oh, it's this, now it's that, no, it's doing this, then it's doing that. Two things. It means I've been two-sided trade and I can't tell who's in control. And maybe nobody's specifically in control. It's two-sided trade. So this is telling me that while I'm thinking I want to be long, because I'm prioritizing the long side, I'm seeing I've got both sides active. So that is an outside in or reversion trade plan. It's just I'm getting surprised. So I don't mind telling you that. Have you ever been surprised? I get surprised. So I know this is support, and I know this is resistance. Again, let's watch. Here we go. There's resistance. Let's watch it. Now, VPOC migration. Where am I? I'm back here. And what's too low? Out here. So I'm just telling you, I'm starting to, look at this. Look where we're coming. See the locations. So this is really nasty. And it's just terrible for me. I don't do well in this. I end up over trading, taking a lot of stops, just want to throw them out, out the window. And if I can get on a good rotation, that's what I trade for, So up here, you can see there's volume right here. You come out. If this is too high, this does set up a potential short, and I'm conflicted. So I'm telling you, a lot of this I didn't trade. I trade a bunch of it, and then I'm getting what's going on because it's this kind of stuff is just miserable for me. So here, long back to here, mean reversion, looking for it to come out the top. So I think I took this one here. I'm trying to remember. And I got taken out. Then, so no, that's it for me. At that point, I'm going, I'm not in it. I'm not in alignment with it. So at this point, we're down here, and I'm going, now we have what looks like something called a double distribution. In other words, we fell out of this auction up here, and now we've rejected it, and now we're down here. So I'm going, well, okay, I got to be selling outside edges because now this is my new auction. So this is too high. We've rejected it, and now we have a double distribution. So the whole thing was really kind of nasty, I'll tell you. Here, let me mark this. This is called a low volume node. It's an outside edge of a distribution, and a distribution is another term for consolidation. And the consolidations are basically these kinds of things, rotational trade, and then you leave it. So that leaves outside edges. So that's an outside edge. This is an outside edge. And you could see them here also. So low volume zone, low volume zone. So what they are the edges of these consolidations. So I kind of have where the market might go and test. And then once it picks stops at these locations, if I come back in, then I can come back in the direction. So that's the idea anyway. So let's look. Market comes up. It comes up here. VPOC drops down. This, for me, was a short. Right here. So I took the short, and I'm looking for it to come down to there, that high volume, which is right there. And I took a stop. So, and then we pushed through all this again. So I did not have a great experience. I'm just telling you. Look at this. Now, there was something going on here I posted in Trader Lab that I found very interesting. In this level, the 70-ish level, there was a lot of icebergs here. So I was looking at this, and I noticed there's 2,000 icebergs. So I get my buyers here. Remember, we had a target, overnight volume point of control. So I missed the whole show. I did not get it. And I do not chase it. I just get, if I get where I'm getting emotionally charged, I just wait. And I was getting emotionally charged here, frustrated. You know, so I go, okay, I'll wait. There's trades all day. I don't have to, because as soon as I'm feeling an emotional charge, I know that I can go on tilt. In other words, and the reason I know that, I'm trading almost 45 years and I journal, and I realized over time, because I always journal and I still do, what if I'm feeling something? What's my behavior after those feelings? What triggers behaviors that are not in my best interest based on my individual and personal wiring? What you do and what I do are different. But what I found is if I'm getting frustrated, and today was a frustrating day, and I take a stop or two, then I'm starting to get where revenge trading can happen. Like, oh, I got to make it back. That brain, there's that voice in your head. I call it hide. It's the lunatic. And the lunatic is fine, except in trading. Then the lunatic is not your friend. It'll cause you to do things not in your best interest, that are not in alignment with the business plan. So right here, I'm looking at this, and I started posting in Trader Lab and saying, guys, let's pay attention here. So let's look at what's happening. You notice we're coming up, going to the moon, hit a primary target right here. We also have a statistic that says potentially we're going to take out the first hour's high, and we have targets above. But this is important because I can't buy high, right? So I need a counter rotation. So let's come back to what we know. This is the last retail price over here. I'm going to mark it variable high volume node. Got to keep track of these, very important, because that's telling me overall where the volume is. So I know if I get a selling opportunity. So we're looking at this, right? So right here, these buyers have been banging their heads against these selling icebergs. So I note this and I'm going, well, that's very interesting. The buyers are aggressive here. And I posted that in the lab. I said, this is really interesting phenomenon. And there's my selling. We come back up. Notice the icebergs again. They're selling like madmen. And to make it more interesting, we take out the first hour's high. Now we have a couple structured trades in here. We have two here. We have something called the IB continuation trade, and we have the IBF. The IBF is a mean reversion trade, which is a short. Now, I'm looking at the selling here. I know statistically I have a high probability of taking the first hour's high out. So this is a very conflicted event. However, it's 9:30 Central Time is when the IB is set, first hour's high. So I get range extension. I'm seeing the icebergs and the absorption. So right here, I'm right here. I'm going, what's going on? Right here. The microstructure is there, and I am looking for a short. It runs away. I do not have a short. And then, of course, the lunatic in the head is going, you should have got in over here. I can't do it. So I don't do it. So let's watch. So we come back here. These are the primary targets for this short, which to me, it was not sellable. I mean, I couldn't do it. Somebody else, fine. Me, not so much. So now I come back here. I get my VPOC migration. Now I know there's a couple possibilities, and this is a very hard day to trade. I know right here, I can come back here, and I can come back here. That's one possibility. The other possibility is this is too high. And of course, this is too high. And I can come back here. So I got two locations to evaluate. I have this to here, which is not workable, but to here is more workable. So, or out here, low volume. So let's look at the behavior together. Very miserable. High volume is up here, in here, where all this selling was. This was an extreme. There's your break. So your high volume is in here. That's what sets this kind of thing. But this is very hard for me. I'm going to just tell you. I don't mind telling you that, because if you think it's not, uh, I certainly have no claim to to be able to trade well in this behavior. I don't. So this is kind of where your risk management and I actually post this. I find now if I have a day, if I have a loss limit. If I hit a loss limit, I just put it away. I just say that's okay. Because then when you have days like yesterday and most other days are okay. This kind of day, I take a lot of trades. I don't like that, because that means that the market is somewhat unstable. This is a mean reversion day, so it's a two-sided trade. That makes it pretty tough. So we come out here, we get sellers here, the buyers absorb them. You see sell stops coming out. Everybody's getting abused. This is mean reversion. We come out here, we come outside. Now we're back above this. This right here, we have our icebergs. This is microstructure. This short I did get, and it's back to here. And I think I posted this in the lab, and then I'm looking for it to come outside. So let's look at it. Outside, low volume nodes. You see it? So this was the last trade I had on. So it was a short to here and then to there, because it's this. So, hard trade, hard. So this is my last trade, and I haven't seen the rest of this, but let's see what it does. What is the condition of the market, guys? What do we have a definition for this in the Trader Lab? What is it? Thrive. Do I look for longs because we opened above? Well, I was looking for the open suggested to me that this was at the time too low, and that the overnight VPOC was too high. Okay. So we open in the middle. So I know we can go to either one, maybe. And remember, I don't know what it'll do. I know what it might do. That's all I know. So it might go to either one of these. So when it opened higher, I was thinking to myself, well, I have high probability of getting here and a lower probability of getting there. Now, probabilities in and of themselves are only guides. That's why when I came in, I was looking for the long side first, but instead I saw the selling, so there were no longs. So then this was on the map, and maybe that. So we got here. And notice where we are. We just come back outside. And where are we coming out to? And what is this? Oh, it's on sale. I'm not paying that. Where's retail? Here. So this is called mean reversion. This is outside in, outside in. So longs to here, shorts to there. So long, and it's a stop pick fiesta. So where's, so down here is the outside. So what happens like here? Now it's very easy to take stops in this. And I always say this in the stream, mean reversion. I guess the joke in the Trader Lab is, yeah, it's mean, because where is the outside edge? Was it there? Look, there's a trigger. Is it here? Which one is the right one? So when you're going to trade mean reversion, you got to be looking to the left. Where's the stops? So I know this is too low, right? And it's an outside edge. I know the outside edge of my distribution is here. Now I don't, but the thing you don't know with this is, how far out are we going to come? Are we going to come here? Are we going to go? Right? Part of the joy. So these are on the map, right? So if you're going to take these trades, you got to be thinking. If you're using a like this kind of a structure, you're going to take more stops. I take more stops in mean reversion. I don't like it, but my job is to trade it, and overall, if I have a positive expectancy in this, then my job is to trade it and just put up with it, because I don't know where anything might happen. Like, let's look at this. I'm at a location. I see absorption. I see my buy icebergs. I get my buyers above this guy who was absorbed. You see it? Same concepts. There's a seller there. Now, either this guy is in trouble or we're going to break. We break high. These sellers were absorbed. I pull back. It's a long, and I take a stop. This is the same as other locations where it works. That's part of the joy of trading. I come down here. Now, here's something to think about. When you have the absorption here and you see the buyers, which is a trigger in the Trader Lab, what else was happening? What happened here? Well, they were absorbed. There's a buyer. There's a buyer. Here's the seller's try. And these buyers are absorbing this seller. Now, you don't know it until the buyers are up here. Then you know this guy's under the bus, this guy's under the bus. And then when you break above these sellers here and these sellers here, you're in business. So now you're looking for the retracement, and that's where you get your long. But here's what I wanted to mention to you. This absorption here, there's no precision in trading, which of course we'd all love, right? We all want precision. Like to buy the low of the day, sell the high of the day. Unfortunately, I think I've sold the low of the day in my career and maybe bought the high of the day. I'm sure we all have at some point. But what happened here? Well, we got under here, but here's what's important. I want you to make a note of this, and maybe I'm taking a little longer to explain it. The fact we can use order flow, we got to understand also how the market works. It's not a wall. What this is, an area. If we have an area in a structured trade, if we come under here and these buyers perceive this as an advantageous price, which is why they're in here, if we come back here, will those buyers activate again? You see, when these 153 sell stops come out, who's on the other side? Are we just going to fall out the bottom? Maybe. But what do we see? Stops, that's the delta. Icebergs, who knows? Buyer here, and test. Here, test. Break high. What was this? Nothing. These buyers were right here. And there's no way to know. Part of the joy. You take your stop, you get back in, or you use stops that are further away to allow for this. You have to vet this and research it. And remember where my location is, right? No precision. Stop could have been under here, or you get stopped out and you put the trade on. That's your choice. And where are you going? Back here, mean reversion. Oops, sorry. Sorry about that. Forgot where we are. Questions, guys? By the way, I hope you're getting something out of this. Yeah, for a lot, Tony. That's right. Yeah, tappish handball. So, guys, this is a context called mean reversion. There are 60 PDFs of these structured trades. That's what this is in the Trader Lab, and you're all welcome to visit Trader Lab. There's no cost. It's open to everybody. All you need to do is click the link in the bottom of YouTube. You do need to verify your email address. That's for security reasons. Keeps the riffraff out, and our goal is to provide, a secure environment for Bookmap participants and subscribers to the Discord server. Bookmap offers a lot of additional education at no cost: stocks, options, crypto, swing trading, market maker behavior, course, order flow with a high tier tool like Bookmap. And then there's the Trader Lab, which is a no-cost community of like-minded traders who've come together to leverage their collective experience. It's about building out the business. I mean, this is a business. It's not a video game. And the thing is, I believe almost anyone can learn how to trade. What happens on any individual event in the market is random. This is a structured trade. Now there's more. Where are we trying to go? Back here. This. And why is that? Oh, it's on sale. Retail. Oh, what's too high? And where's the stops? Here. So this is a structured trade. You would learn this in Trader Lab. So, long here, take a stop, or long here, further outside. You have to vet the metrics. You will understand. The job of developing the business of trading is to know what your edge is. You may find that instead of using a micrometer and having your stop here, that if you use, and I'm just giving you a hypothetical, a 3-point stop from entry, that maybe you won't get stopped out because you're allowing for the slop. How do you know the answer to that? That's the work. That's what none of us want to do. We all want to play, right? We all want to get the dopamine fix. Well, first things first. You need the plan. You need to know where your edge is. Las Vegas doesn't make games up. They know where their edge is, and they play their games exactly the same way because they know statistically in a random distribution of outcomes, because it's all random, that over time they extract the dollars from the gamblers, even though the gamblers walk out with cash. And it's just same with us, So remember, here to here. And here's the thing I want to remind you guys of something I was saying earlier. When we were trading back to the VHVNs, I forget where that was. I do forget. Was it out here back to, I don't remember. But you notice, remember we were taking longs back to the variable high volume nodes, right? For scaling. And the market was having big trouble. It was up here, I think. Big trouble. Now, what are we doing here? Same concept. Back to here. It's a reversion trade. So now this is either going to clear this and squeeze up here, or it's going to take your runner out. That's about it. That's as deep as this gets. Variable high volume node is down here. We're going to label it. So what I do with these is I trade the targets because of the auction. In other words, how does the market work? This is retail. If it's too high and they don't want to pay it, we can come back outside. If it's just a bounce and we hold structure down here, and this is where you either would have a stop under here or right here, and you would scale and you'd risk scratch if that's, however you wanted to do it, or you hold and you fasten your seatbelt. Because if we clear this, we go here. Because what we're trying to do is this. Oh, it's on sale. Retail, that's why it's a target. And then if this is too high, there's a problem, which we won't know until we know. Hindsight. It's always great in hindsight. Everything's very clear. But the nature of the market, if we clear this, is to come out here. So we'll get to see that together. Do you guys have questions? And by the way, while we're waiting for this, I'm going to just show you a couple things. First of all, if you want to access Bookmap Discord Trader Lab, you need to confirm your email. And I am going to be doing, and I do streams that are exclusively for the Bookmap Trader Lab community, and they are done after these streams on an ad hoc basis. So not all the time, once in a while, who knows when, but in order to attend those, you do need to be confirmed, and to access the 60 PDFs I'm going to show you and the library of webinars that you can access in the Bookmap Discord Trader Lab community, plus all the other education, streamers, just an amazing amount of stuff. In fact, there's a free version of Bookmap. It's the digital version. You can get that. There should be a link in the bottom of YouTube. You can get your hands on this thing. There's no cost. Comes with data. I think if you ever wanted to kind of check it out. And here's the other thing. If you are a Bookmap subscriber, even to the free version, you can then attend all the special events that are for Bookmap subscribers exclusively. I kind of think before they change that, you might want to, think about that. Okay, let's get back to the world. So we pull outside. Notice, let's look at what happened here. You have the sellers. What's going on here? Well, that's a stop sweep, but that's okay. I got absorption. When I get above delta, it is suggesting right here in the microstructure, this is too low. This is the retail. Think Russian dolls. Write that down. Fractals. If I can get above here, where's my next target? It's out here. So for a structured trade, and you tell me if this is okay. I mean, look, it's nasty. It's just trading. What are you going to do? Long from here to here. Stop stays here, or you're managing. This is another long here, by the way, to here. And then you're holding. And you're looking for, there's stops above the high of the day, which might be in, it might be solid. So for me, I just trade structure. I'm not saying it's good. I'm just saying it's a way to slice the whole thing up. So I'm going for this. Because I know shorts are going to have their stops over here and here. So I'm going up here. That's the idea. Doesn't mean it'll do it, because that part is, I like to say I'm clueless. And that doesn't mean ignorant. It means I can't predict. So I just let it do what it's going to do. I know this is resistance, and I know this is retail. If it's too expensive, we can fall out. If it's fair, we can then rotate back around to look for what's too high. That's what I know. And that's all I need to know, because I can't predict. Does that make sense, guys? You getting something out of this? And please give a thumb up in YouTube. If you're getting some value out of this, and also use the link down there to visit the Bookmap Discord Trader Lab community. There's no cost, and we'd like to meet you. You come by, you wave, you say hi. It's a great community. There's a lot of posting going on in there. It's not romper room. It's about the business. It's a professional environment. Screenshots, posting, discussion, debate, fun, but it's all very serious. We help each other. The thing about this business is, even though I'm doing this going on 45 years every day. I watch streams. I do replays on the weekend. I look at what I'm doing. Can I do it better? And the answer is yes, of course. So, is there anything I can extract that I'm not seeing that maybe will help me shave a tick, or see a setup or a structure that maybe I've missed over the years, which is completely possible. It doesn't, I know I don't know. Humility, by the way, is an important component of this. You got to leave your ego at the door, because you'll get straightened out real fast in this business. No matter how successful you've been in the outside world, those things do not apply here. The things that got you successful, the confidence, the ability, the belief that you can do anything and you'll succeed if you persist, does not necessarily mean you'll succeed here. That ego, when you walk into a room and before you even walk in, mentally you're already there and you already got it, they're all yours, doesn't exist here. Because you have to start at the beginning and develop it, because you're in a different space. You might as well be on Mars. It just doesn't work the same. Now, persistence is very important, of course, and the ability to withstand psychological stress. You're going to experience it like you've never experienced it before, because the reason you're able to do this business potentially is because of your success elsewhere in whatever pursuits. So we tend to bring that with us. Very logical. But other than persistence, I believe you've got to become humble and not think you know what this business is, because you can spend many years with a belief that is not in alignment, because you base your beliefs on your experience, your socialization. You're looking for approval. We all want to be a winner. We look for the market to approve us. Yeah, you're smart. You know what you're doing. The market could care less about us. I got news for you. And so neither does anybody else care about us. The market's random. So if we're in a gaming business, not in a predictive business, not I need to be right business. Yeah, I want to be right, but I don't need to be right to be profitable. I need to be organized. I need to have a plan that has an edge. I need to operate like a casino. That's how I need to be. I don't need to be right. I need to be consistent and only interact when I have an edge. That's what I need to do. Now, the impulses, the adrenaline, the dopamine, the endorphins that get released, it's all part of our addiction to feeling good. It's no different than somebody who wants to eat that fifth piece of cake. It's that feel good because the sugar and the carbs stimulate areas of the brain. Now, you need to understand how your mind works. This trading isn't just push the button and have a video game. You need to dig down into yourself at all levels, maybe even a metabolic level, to understand the mechanisms that are designed that are inside us that we are feeding at all times, not consciously, based on our wiring. You have the reptilian brain, which wants to run from the saber-toothed tiger. You've got the adrenaline. You've got the dopamine that you want to feed. All these things are not conscious to you. If you don't take the time to learn about yourself, you're going to be missing a big piece. Because part of the picture of why we don't do what we intend to do is generated not only by not having a plan, of course, but if you had a plan, you got to realize that you're pushing against a lot of elements, many of which you're not conscious of. I hope you're finding this little sidebar useful while we're waiting on this trade to ferment. I thought I would talk to you about it because I don't think you get to hear about this too much. And you don't get to think about it because we're too focused on this, What does all this mean? Well, what is it that keeps you from actually putting the trade on? What is it that gets you to get fearful right here and blast out of the trade right there when the trade hasn't failed? Those are the questions. And that's why you got to journal. When you come to Trader Lab, you're going to learn about these things because we dig deep into this because this is what most retail traders not only don't understand, they never get exposed to that kind of thinking. If you have, that's great. But you really got to dig deep here, not only into what trading is, but into yourself. The ultimate obstacle, I believe, is yourself, not learning how to trade. I believe you come to Trader Lab, you can learn how to trade. It's just personal belief. I'm not saying you can. I'm saying you'll have the opportunity. But the doing it, that is another issue. And you got to work on that as diligently as you do trying to find the next setup. Does that make sense? Kevin's asking me, would I take the short if the IB high is retested? That's a great question. I think these are valid. In other words, this was an excess up here. If we get the stops out, I'm getting a question because we have a structured trade here. This is our next target. Now, we don't have to get here. We might only come. See, this is the other thing. We don't have to get here now, ever, or never. We might only come up here or out. See, where's the outside edge? See, this is part of the randomness. I know this is important. And I know this is important. For me, this is where I'm trying to go. And it doesn't mean it'll ever get there. That's, we might just come up here, come down here, then go back up. It can do anything. So this part, we don't know. So, but I do is a structured trades. I know this is my outside edge of the distribution. There's your low volume node. It's right out here. So the question was, would I sell this if we get up here? I'm going to say is I'd entertain it. Like throw a party and order a pizza. I'd entertain it. Whoops, that's not what I meant. Hold on. So what I have out here is an outside edge. Remember, what's too high, what's too low. Okay. Right now we're having trouble with this thing. This is retail. I'm still looking out here. Now, let me tell you, when I say I'm looking, it's a structured trade. It doesn't mean anything other than what the market will do right now in this moment. So what are my choices? Let's look at our choices. My choice is to hold the trade. I got my scale. I can put my stop at entry and just, say la guerre, right? Let the chips fall where they may. The worst that happens is I got my scale. I've got burgers in the hopper and maybe a nice ribeye, bottle of wine. And if the other one comes out break even, I say, okay, I could do that. Or I can come back and start looking at microstructure, look at where my excesses were and where my support is. Here, where's my support? Here. Now, let me tell you some problems with this. VWAP. What do retail traders do? They put their stops at the VWAP in the mid. Do I want to do what they do? Write this down. Think like a retail trader. Don't act like one. If I put my stop here and all of a sudden they drop a bomb on this and it comes under here, by the way, there's another structured trade here. It needs to be outside in. For me, it's all outside in, not inside out. Whoop. Where'd it go? Remember, that's our target, not a recommendation. So this is trade plan specific. So if you're in Trader Lab, this is what you might be doing if this is your plan and you've vetted it. Now, there's going to be other traders in Trader Lab that are doing completely different things because there's not one way to do this. But most traders come to Trader Lab because they want to do better, obviously. And we all want to do better. And I will tell you, there isn't one way to trade, but something I figured out for myself many years ago. I started out, let's just say, in 1980, okay? So in 1980, we didn't have the internet. We didn't have computers, really. We had terminals. So I was down at the exchange. So, we had, terminals. And I think it was ADP, Comtrend was what it was called. I can't remember, it's so long ago. And this is before, I think, Bloomberg was just starting up all this. So this is back in the Stone Age. So indicators, Wells Wilder just was we're starting to just see stuff, And I shared an office with George Lane. He created stochastics. That's an early oscillator. So I thought the Holy Grail showed up. So I went down indicator world. I said, oh, this is wonderful. Now it crosses over and I know to get long. Okay. So I started with that, and then we had RSI and all this other stuff, and divergence, and you start getting in all this stuff. So I spent years with that. And then I built trading systems, which were basically indicators on steroids. And then optimization, walk forward testing, and all this. And I found something that was happening. I'd be looking, when you do optimization, you're taking a chunk of data in the past, and then you're reserving a certain chunk of it so you could do what's called a walk forward test. So you go way back, maybe 30 days of data, and you take maybe 2 weeks or 3 weeks of it, and you optimize. And then you do a walk forward test to see how it holds up. So that's what you do when you have a system. So that's what I did. And I kept waking up with something I coined as Trader Groundhog Day, because I was trying to trade the present on what happened in the past. Well, today is not yesterday, is it? Well, but isn't that what you're doing when you go back and curve fit? Because that's what it is. We use the term optimization, but it's really curve fitting. So if we curve fit for a previous behavior, and we're, quote, hoping that it's going to repeat, so we catch the next big move next time, If you took yesterday's behavior, and let's just say hypothetically you adjusted your Keltner channel, your Bollinger Band, your moving average, your EMA, your Picket, you know, to catch yesterday's big swings, and then you walk in the day with it, what's going to happen? Not so good. Then you're going to maybe adjust it again. I coined a phrase called Trader Groundhog Day because we keep waking up doing the same process, and we believe we're doing the right thing. That's the other part of it, beliefs. Well, if we believe, because we're persistent, that if we persist and we believe we're doing the right thing, then it should all work out, right? But we keep waking up at the same place. That's the Trader Groundhog Day part of this, because our process might not be in alignment with the business. Our beliefs are not in alignment. We're using multiple inputs, random inputs in a random environment. How can you get any consistency out of that or extract any metrics that tell you that you actually have a process that will succeed other than randomly? Everything exceeds randomly. Throw a dart at a buy and have it say buy or sell and pick one. It's going to have winners. But can you make a career out of that? I found, unfortunately, it took me a lot longer than maybe you, because there was no information when I started. You had to buy a book. That was it. Or go to a seminar and pay a horrendous amount of money back then. And you all know, if you've done that or gone to chat rooms where you pay subscriptions and you get nothing out of it, I'm sure, and there are good ones, I'm sure, you know what that's all about. And you've all probably been hooked on the marketing thing of you only need this in order to succeed, or the only one thing. That's just playing on your emotions, your desires. It has nothing to do with the world of trading, in my opinion, and experience. That's Trader Groundhog Day. I did a webinar on it, and you can all watch that if you come to the Bookmap Discard Trader Lab community and download, 60 PDFs of these structured trades. You would know what this is if you were in Trader Lab. Now, what's going to happen, you will never know, whether you're in Trader Lab or sitting on Mars. But if you understand market mechanics, which is what this is all about, how the market works, why it does what it does, and how, at times, you might get in alignment with it, that's what this is all about. And that's why this is the target, and it's not a trade recommendation. Does this make sense, guys? Please give a thumb up in YouTube. This is what Trader Lab is about. And we all take stops. Sorry about that, but I'm sure the casinos would prefer to just skip the hands where they pay the gamblers. But they see it as overhead and costs of production. Can we reframe it? Question. Now remember, this trade, like all trades, can just not work for the runner. But the primary objective when I put a trade on is to get a scale, to get paid, to cover my risk. Then psychologically, I've basically got control over my emotional state. In other words, I have less fear. I'm still going to be riding the emotional roller coaster. When it does this, I'm despondent. When it does this, I'm euphoric. Do you have that experience? That's our chemicals. That's our brain. Fight and flight. Oh, euphoria. Oh, depression. Oh, it's going to the moon. Oh, I'm going to get stopped out. See what I mean? So you need to be journaling. So you start to learn the chemical, because it's being triggered by fight and flight. In other words, primal wiring. I call that Hyde, Jekyll and Hyde. Hyde's the lunatic, and it's the reptilian brain. So you need to understand that. You also need to understand when you become seeking, when you're seeking dopamine, why, or you have a winning trade and now you get overconfident. You're looking for a dopamine fix. So come to Trader Lab if these are concepts you haven't considered. Most of us are all thinking about where's my quote setup. We spend our lives looking for setups. Setups are not a big deal. There's 60 PDFs of them. You can have them. I give them away because that's not the problem. It really isn't. You may think it is. You can learn that. That's what Trader Lab is. You can learn all this. The thing is, how do you operate in this environment where you're getting this and then it's doing this? You want to throw yourself out the window. It will do that to you. because we don't encounter this in the real world. We encounter it here. So you really have to put a different, mentally, it's a different game, if you will. So mentally, you've got to kind of reorient yourself. When you sit down to trade, I have a tape that I listen to. I kind of get meditative in a sense to clear my mind, to be here. I don't look at emails. I don't do anything. If I have a trade on, I will look at the Trader Lab chat. I will post because now I'm just managing the trade. And I know I have a process that tells me what I do and where I do it. It's all worked out before I ever put a live trade on. If you're trading without a plan, you're just gambling. And that's okay. But just understand you're making a choice. I always think if I'm going to gamble, I'm going to go to casino, get the cocktails and the ticket to the buffet, and maybe even tickets to see Adele. Okay. But when I'm here, I don't want to be the gambler. I want to be the house. I want to extract an edge, even though the outcome of any trade is random. That I know too. And I have to remind myself of that. I'm not seeking approval from the market. I'm seeking adherence to a vetted trade plan. And no matter the outcome, whether I have winning trades, losing day, hit my loss limit, all part of trading. Nobody's gonna probably admit to you that happens, but you know what? It happens to everybody. So it's okay, because your job, if your plan is not in alignment with the market, which will happen, or during phases of transitions, you're zigging, the market's zagging, you don't know. It is until hindsight, so you'll be trading, the market's going south, but it's actually about to reverse. You won't know until it does, right? So the only way I judge myself is, did I follow my plan? And that's a winning day for me, even if cash-wise it's not a winning day, because I know over time there's a random distribution of outcomes, and that I succeed by following my plan, not by making it up and not by impulsing in or doing any of the other things that most retail traders do. So that's the way I operate. I'm just saying it's a way. Where am I going? Right? So this is a structured trade. Are you guys okay with this? You could do this with a 2-lot. Scale here. Stop break even on your entry, wherever the heck that is. Go in here. How many points do we have here? I'm not saying this is a good trade, but it's going to be, maybe if we get here, over a 10, 12, 13 point trade plus a scale. 15 points or so. One trade. Now, does that work for you? This is what the Trader Lab is about. It's not a scalpy, action, adrenaline fulfilling experience. It is a structured trading to take the larger opportunities when we have an edge. If I took a stop here, let's just say I did, and we don't like that, and I come out here and I'm emotionally charged, that's me, by the way, right? And now I get another long. And now I get scaled here, and assuming I get my target or whatever I do, I get here or wherever, just say, does that pay for this stop and still give me a nice net? If I'm not taking the broader stroke, then I'm going to be exchanging dollars. Take a stop, get in here, do what? Get out here, micromanage, get out here. You see what I'm saying? Where's the opportunity in this business? It's this. My opinion. Now, a lot of traders think this is a scalping business. I'm not saying it isn't, but I'm going to say is my risk here is the same as here. And if I was going for 3 ticks or 2 points or whatever it is, I've got the same risk. Why wouldn't I be working to go here? Does that make sense to this astute group of traders? By the way, Kevin, you're asking me about the IBF. It's a curiosity to me. This was the trade. Let's watch now. And this is not a trade recommendation. We have another trade that might develop here. Let's watch. I've got my selling icebergs. Let's get into the micro. And guys, this is not a trade recommendation. I get pummeled with everybody else because that's trading. I don't, This is my outside edge. This right here is the IB. If we are going to stay in balance, and I don't know if we will, we're going to be looking potentially for a return here, not a trade recommendation. But this is not ripe yet. There is no trade here. Okay? Not yet. And maybe never. Now, there are a couple other possibilities here. Now, I'm not going to take a long here, and it could go wherever it wants to go. For me, I'm still in a two-sided trade with right now we're extending higher again. So it is possible we're going to keep going. Okay? So I don't have a short. I'm outside this outside edge, which was my outside edge of the distribution, which is the reason for this being the target. You see? I'm outside of it. Now, right here, I'm going to watch the behavior, but I'm not seeing selling. You notice I'm seeing what? Buyers, 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 buyers. I don't see it. I mean, I see the icebergs, but the buyers are back in control. So I don't have a trade. Hold on one second. I got to check something. Yeah, no, I don't have a trade here. So I have nothing to do. I'm just like, oh, that's nice. Questions, guys? Stephen, I don't think the audio is out again, is it? Well, I don't know what there's a problem with Discord then. So you guys, this stream will be available in YouTube for you guys. I don't know why you guys are having okay audio. Okay. Just go over to YouTube, or you guys can access this. I'll make it available. If you're in YouTube and you want to, it's very interesting, Dan, that we're having these new issues here in Discord. It's kind of unusual. Guys, I'm going to make this available. If you want, copy the link at the top. If you're in YouTube and you want to watch this again, same thing. If you're in Discord, this stream will be available. I'm going to leave it up just for the rest of the day. So if you want to watch this again, apologize for the technical issues in Discord. It's rather unusual. Thing is very stable typically. Okay, high of the day. I'm seeing a little selling here, and you would anticipate selling ahead of the high of the day, right? So let's watch here. Now, I don't pick the high of the day. It's not my skill, so I let somebody else do that. Then I look at retracements. What I do pretty much is, let's look at this in the micro, and I'm running out of time. I only got a couple minutes. So, auction, seller here. Buyers on top, sellers here. This, once we get above, absorption. Come up. Now, this was my target, right? Now, there are choices with this. So I just trade the targets. And this is a 2-lot configuration. If I'm running a 3-lot configuration, this would be my exit. And then if I have a runner, which is a different conversation, I'm going to use this. Boom, boom, boom. I'd be out here. Or actually, or under here, either one. So here's the last place the sellers were active. Buyers above, sellers here. So this is where this trade would end, right in here for me. If I had a 3-lot. But for Trader Lab, I always talk about 2 lots because that's the minimum configuration, because the job of the first contract is to get risk neutral. And you have to vet these for yourself. If you get risk neutral, and by the way, we all take full stops, but the idea of the first contract is to buy the stop on the runner. That calms your emotions down, gives you more control. And also, if you do get out and you get stopped on your runner, it's a scratch and your broker sends you a gift basket. But basically, you're still, all it did was fine. I probed the market. I got taken out. Maybe you lock in one tick, cover your commit, whatever, and next trade. That's a lot different than taking a full stop. And you will take full stops. So you take your stops, you're going to take your scales and scratches, and then you're going to take your scales and targets or trade management. That's what you're going to get. And right here, you'll notice what's going on. This is a consolidation. It's a change. It's a pause. Here's the possibilities. We come back here. Or right here, you're seeing the fight. Buyers are here. Sellers are here. We can get below these guys, then possibility to come here. Not a recommendation. Let's just see. And I'm out of time. Please give a thumb up in YouTube. I got just a couple minutes. We'll hang out together. There's a link in the bottom of YouTube if you want to visit Trader Lab community. You can download those 60 PDFs of these structured trades. You kind of see them. And then your job is to reverse engineer them and turn them into something that you can work with. One at a time. Build out a trade plan that gives you a statistical edge. And then it's a matter of waiting for your bus. So there is no short. So for me, this trade would be fine if it was over. Here's your sellers. You see them? So here you have your choices. If you put your stop into here, you'd be out. If you keep it back, and this is all something you have to vet. Here's what happened. Here we have the buyers. These sellers were absorbed. There's microstructure. The sellers come down here. They are absorbed. There's the buyers. The sellers come down here. They are absorbed. There's the buyers. We come down here. We're still holding this. And there's the acceleration. You can do this any way you want. I cannot give you an opinion other than you have to find what aligns with you psychologically. And you're all invited to visit Trader Lab. Apologize for you guys in Discord. I don't know what the audio issue was over there. Any final questions, guys? Throw them in the hopper. If you're in YouTube, please give a thumb up. Hope you got something from this. This is not complicated. It is random. I believe anybody can learn how to trade if you're in the right environment and you start with a basis of tools. And then you take the tools that other traders are already using, processes that are already proven, and then you tweak them to fit your psychology. In other words, your time frame. What I share here in the stream works in all fractals and time frames. In fact, when we trade, we're trading inside of multiple time frames. I don't think of time, I think of fractal. All it is no clock. It's just behavior. This is a fractal because it's behavior. There's no clock involved. Then we come here. We're holding this support. It's a fractal. It's support. Here, there's absorption. There's a seller. It's the icebergs. There is a sweep. And where's support? It's down here. If I get above this guy, I continue. If I can't clear this, I'm going to go the other way. You can use these. Thanks for visiting Trader Lab, guys. Remember, this stream's available to you guys if you want to review it. Copy that link. It'll be available. Apologize in Discord for I don't know what the technical issue is. We're going to check with our team at Bookmap. They're very knowledgeable, and I'm sure they will I'm just getting a post that I see that's quite amusing. Pizza for everybody in the Trader Lab. Thanks, everybody. Please give a thumb up. Appreciate you visiting Trader Lab today. Look forward to seeing you guys tomorrow. If you had a tough time today, today was not what you call a fun environment because of the volatility and the rotations. But if you were in Trader Lab, you could navigate it, though you would be taking stops along the way like we all do. But overall, you could have a pretty decent day, as I just shared with you, trading mean reversion and trying to stay in alignment. All we have is with the trade plan is to understand the conditions, define when they change, deploy structured trades that have a vetted statistical edge, and then accept the random outcome of any interaction with the other participants. Thumb up in YouTube, please. Thanks again. Look forward to seeing you soon.